And good afternoon, everybody. This is Michael Filigera. I'm with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 future, the ES, on Monday, April 26th, 2021. I don't have a lot to be adding to our existing analysis at the moment. We remain in what I'm still counting as a intermediate level fourth wave. And thus far, it is not panning out as I would typically consider an intermediate degree fourth wave to pan out. Because as you can see by this Fibonacci line, all the way down here at 3,885, that's the minimum, bare minimum, 0.236 of that intermediate wave 3 that I expect an intermediate wave 4 to come in. Now, we've been counting this as wave A of intermediate wave 4, and then this would be wave B. I have to go back and take a look at this more carefully because there is now the possibility that intermediate wave 3 is not over yet, and that we're going to go up again, which we already have once, and likely very close to doing it again, go up and put in an additional high above these levels to complete that intermediate wave 3. So we might have to back this all up, consider this a minor wave 4, and that we're in a minor wave 5 up. And if that's the case, we're going to likely see these upper levels before all is said and done, and possibly even 4,300. Before all is said and done. But right now, I'm going to continue to look at this as a little bit larger corrective pattern. We're in the process of tracing out that B wave. Again, the other possibility is that this small fourth wave, so if we had to consider it a minor 4, could have completed right here at last week's lows at 4,115. And that would have produced a slight failure in that the C wave, if I have to back this up and consider this A, that B, and this C, that the B wave and the C wave did not take out the low of wave A. And that produces a failure. Not a big failure, but still a failure. But that portends that the underlying strength in the market just overwhelmed any corrective process, and the rally is now back on. And then this would then have started minor wave 5 up to complete that intermediate wave 3. So we're going to leave that open, by the way, that we may have to move this all out and move this over and continue this count. I'm not sure exactly how, but we may have to, because that's really what the market is telling us. So again, let's deal with what's in front of us. So if I need to count that as the completion of a small minor fourth wave, and then we're in a minor fifth wave, then we're looking for these levels. We're looking for this move. First, under any condition, it's going to find some resistance here at 4,190, 91, 92. Then a break above that pushes it to 4,200, and then 4,216, and then 4,220. Could it get there? Absolutely. Here's some of the players that are going to be reporting this week that are members of the S&P 500. We had Tesla today, a little disappointing, but still, Tesla reported today, provided a burst, and now we've got the market that's coming back off of that immediate sell-off after that, but has now moved all the way back up, and it sits just below our all-time highs. But we have Apple reporting on Thursday. We've got Apple reports Wednesday, Amazon on Thursday, Facebook on Wednesday, and Google tomorrow. So we've got big players coming in, and I believe all 4 are within the S&P 500. Definitely Apple and Amazon. So we could get some fireworks. In fact, I'm anticipating fireworks in either direction, folks, because if they don't like these earnings and they come out anywhere with guidance lower, the market's going to go down. And it will take, if Amazon or Apple really starts to head lower, it's going to take everything else with it. So that's why we've got to play what's in front of us. These are our levels. Now, tomorrow, we could get a little bit higher. That may complete, if this is still going to be a 5-wave structure, we needed to get above that high. And once it does, that's going to complete a 5 up off of this low. Now, two things it could be doing: completing the C wave within that minute B within this intermediate level correction. And that then should set the stage for a C wave to bring everything back down. We'll add those Fibonacci's should that be the case. But in any case, I'm going to be looking at it as if the alternate count is actually going to be the one that's enforced. And that would be that this level right here completed this small corrective phase. And now we're in that minor wave 5 going up. That matches pretty much tick for tick with the NASDAQ. And those two markets are now totally in play because of their in common companies within each index. So I would think that after that, we get a little bit of a pullback. That pullback should not go too far. Maybe 41.67, maybe down to 41.60, maybe as low as 41.55. I'm not looking for a whole lot. It's just a little wave 2. And then we burst higher as the market then gets all of these earnings reports in. Upside, again, above those levels, 4,200. Then we've got these others, 4,220. That zone would be expected to complete this. If this is a 5 waves, I'd look for that to complete somewhere between these two zones and then pull back. Now, what we would have to look at, if this completed it and we're in this 5, and it's going to be a minor 5 to complete the 3, then I'm looking for these upper levels, maybe as high as 4,300, maybe. It's going to get a lot of resistance points coming in between there, and we'll run additional Fibonacci's should it start to break, and we're getting a clearer picture that it's going to continue, and now it's going to move up in the 3rd and complete this intermediate wave 3, setting the stage for that larger intermediate wave 4. I'm getting ahead of myself. We're going to take it one day at a time. For tomorrow, I really am expecting some additional upside initially. We still have Europe to take into everything that took on today, and then possibly pull back in a corrective move. If our levels hold, then I'm looking for it to go up again. But we'll take this as it comes. If it completed this, a C wave, and we're going to drop a C wave of B, and we're going to drop in a C wave of the 4th wave, that's going to bring us back down below, but it's going to drop in 5. And they should be fairly large because this was fairly large and this one was pretty good. But then the relationships are actually going to be as to this 5th wave, which we haven't really gotten yet, but we'll be able to then pull out some Fibonacci's running it from here to here on what that C wave should look like, excuse me. So let me do that real quick. We'll get rid of that one, and we're going to now look to do, come on, there you go. I'm going to go down to the bottom of A, and I'm going to go to this, and this would then, actually, I am going to go out to, let's just say we get up to here. You can begin to see, I'm looking at least 1.618, 1.382 to complete that whole cycle. And I actually need to take it from the top of the B wave, and we don't know where that is yet, but so these are estimates. So you can get an idea if indeed this additional upside completes this larger, little bit larger B wave, then that's where the C wave should bring us, okay? Otherwise, we are actually going to be off to the races, and we're going to be more concerned with our upper levels about the 4,200 level, possibly as high as 43, but I'm going to be looking for pullbacks. So we're going to take it one day at a time. And here's the clues. We got to continue to trade with the Fibonacci levels in place. And remember, you can put them in pretty easily. We've got what we had before. We had it there to there. Come on, click, 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 click. Come on. Sometimes it gets real fussy with me. And it kind of is a little bit irritating when I'm on time frame and I don't want to stay for all day. And then we're going to connect that to that. And that's how we got those Fibonacci levels. So you can see there to there. So when you're doing your extensions, you're just taking it from points that affect. So if I need to cut, where's the C wave going to bring me to? Then I'm going to collect from here to here, or wherever this B wave finishes. Right now we have these, and those are going to keep up for tomorrow. Coming off, we have these levels right here. Should start to reach that level. Now we're going to be looking for it to come down a little bit. Then you're going to run Fibonacci's from this level to this level, but it's just going to be retracements, not extensions, just a retracement level down. So again, I trade using my Fibonacci's. I trade intraday on a 1 minute, 2 minute, and 5 minute chart. That's what I have set up. And then, and I'm going to show you, because right now my primary market that I'm trading is the NASDAQ. But you can see I have a 1, a 2, and a 5 minute. And I've got my Fibonacci's in here. And I've got my moving averages. Now, the big clue when you're using these moving averages, folks, is that I use a 200, a 50, a 20, and an 8. Those are the primary ones. And when they get in alignment on my 1, 2, and 5, and alignment, I mean that the 50 is above the 200, the 20 is above the 50, and the 8 is above the 20. And if that happens here, and that happens here, and they're all angling up, play it. Play it from the long side. That means the market is going to go and it's going to be extended. So when the moving averages are flat as a pancake, then you're going to go sideways. You're going to be range bound, or call, box of doom or a box of crap. So because they're very difficult to trade. So that's how you use your moving averages. That's how you get them into place. And when they come up like that, you're just going to want to work it all the way until you get a signal that tells you, nope, we're going to correct for a little bit. Okay. So tomorrow, I'm expecting a little bit additional upside. I will trade accordingly with my moving averages, both up and down. So if we get up and we just break to a slight new high in that S&P, then I'm going to be looking for an additional 3 waves down, not a 5 wave, but a 3 wave initially. And we're going to see how that develops. But again, work your moving averages, work your Fibonacci levels, and that's going to give you a lot of hints on the depth and what the structure should look like. That's it for tonight. The next update will be tomorrow.